Hey guys, Stock Saturday, and it's been a red week. Red week in the markets from the looks of it. S&P down about 2.3%, Nasdaq down over 3%, and I am down just over 3%. So I don't go up when the markets go up, and I do go down when they go down. So that's quite poor, but that's the way I'm positioned at the moment, hoping I'm going to outperform in the downturn. So yeah, we've had some sort of more earnings. Let's have a look at what's come out in the last week. So Stellantis only actually report every 6 months. You get the revenue numbers in April for Q1 and the sort of shipment numbers, but not actual earnings. And yeah, so they've released their first half of 2023 numbers, and all looking very nice. Battery electric vehicle sales up 24%, some hybrids in there as well, the low energy as they call it, but fully electric up 24%. Would be nice to sort of see that a little bit higher, but yeah, they're obviously sort of cannibalizing their own sales as well, so you know, shipments are up overall, but the sort of battery electric sales are going to be at the expense of some of their own sales. And yeah, just looking at the segments, so North America sort of doing okay. Operating income slightly down, 17.5%, but that's still pretty good. Number one in hybrid sales as well, which is pretty nice, sort of winning some awards and a lot more battery electric vehicles for the US side coming out. Dodge Charger Daytona, the Jeep Wagoneer, Jeep Recon, and the Ram 1500 to sort of rival the Ford F-150 Lightning. So yeah, that's interesting. And the Ram ProMaster, the commercial vehicle, and the Fiat 500 to arrive in North America, but I'm not sure how much the Americans really like the Fiat 500. Obviously, they're not all that keen on small cars for the most part. Europe looking pretty good. Operating income slightly up. Market share a little bit down, but it's sort of drastically changing with the sort of switch to battery electric and some of the sort of foreign brands coming in, and Tesla, of course. And then Middle East, South America, and China all doing pretty well. Middle East doing a lot better than the other two, but even China sort of looks like shipments down, but the margin up. So yeah, that's not ideal, but could be worse. They're not really a huge player in China just yet. Could be potentially in the future. And yeah, iconic brands driving growth, I would say, with rather horrible cars. These aren't really sort of my pick. The Maserati Grecale is not really for me. Alfa Romeo, a lot of the Alfa Romeos sort of are car fans' cars, but yeah, those sort of in particular aren't really for me. The Jeep Avenger, I think, looks pretty good actually, and battery electric should do well hopefully. And the Dodge Hornet, again, sort of kind of a horrible car. Fiat as well, the 600e, not really keen on that, and the Topolino, but if they're selling, then fair enough. It's up to general taste. It's caught my eye as well. I sort of pay a lot of attention to like Europe sales and that sort of thing, but no one ever really sort of focuses on commercial. And so they are number one in battery electric commercial vehicle sales in Europe with 43% market share. So that's an incredible market share to have. So obviously they've got between Vauxhall, Citroën, Fiat and Peugeot, and then Ram, obviously not really over in the UK side, but yeah, between all of those, I guess you can understand they would have quite a market share, but that is sort of rather impressive, I would say, and not something sort of people focus on. And it's 33% of Stellantis's total net revenue, so I think people need to sort of pay a little bit more attention to the fact they are sort of leading in electric vans and that sort of thing. And so coming on to the numbers, it seems a bit of a blowout all round, really. Combined shipments up 10% on last year. Obviously 2022 was a bit of an issue with the chip shortage still, but yeah, it's up, still below the all-time highs of sort of 7.5 million a year. This would be sort of 6.6 million or so a year, but revenue's up because they can still keep increasing the prices. So shipments up 10%, revenue up 12%, and operating income up 11% as well. But I always tend to go right the way down to net profits. Free cash flow up 63%. This is sort of always up and down depending on how much they're spending on expansion. But yeah, you come down to net profit, it's 10.9 billion euros for 6 months. So that's incredible, really. If you take that sort of as an annualised rate, that's over a third of the market cap, which is crazy, I think, considering their net cash position as well. They are starting to... They sort of had a positive move after these earnings, so people are starting to sort of recognise it a little, but it was, price was higher, I think, sort of a year and a half ago, if I recall. So, yeah, people aren't really sort of pricing all that much in. Net revenue up due to sort of volume and mix, selling more expensive cars and increasing the price. A little bit of FX issues, but nothing to sort of really push anything. And then adjusted income is largely putting the price up. And then just checking on the net cash position. So we've got debt increased 2.3 billion euros, and cash also increased 2.5 billion euros. So financial position is pretty strong. Receivables up slightly as well, or up quite a bit from the second half. And yeah, net financial position, including the financial services side, 29 billion euros. So I'm not saying you can knock all of that off the market cap, but I think you can knock a fair bit off, and then sort of take 11 billion euros for the first half net profit. Sort of maybe they make a bit less than that in the second half, but it's still 3 or 4 times earnings without deducting any of the cash, and sort of 2 or 3 times net earnings if you do knock off some of this cash. So I still say very good value. So Volkswagen Group, I thought pretty good numbers, but just not quite as good as Stellantis. Operating profit of 13.9 billion euros, 8.9% margin. Battery electric vehicles rose 50% from last year. That's pretty good, a lot better than Stellantis, so they have got that going for them at least. China volume, if you come down to the strategic transformation in China, it's obviously a huge sort of risk and a huge issue for them that China want to basically make their own vehicles. You've got BYD and sort of 101 other firms there, but sort of BYD being still the main one, wanting to sort of make their own cars. But yeah, they did 1.45 million in the first half of 2023, down 1.2%, which I guess you could expect it would have been a lot worse than that. That includes, or that obviously is largely petrol and diesel vehicles and hybrids. So on the electric side, it's a lot worse, but I didn't see that broken down. So just looking at their figures, they do quarterly, but I'll just do the half to sort of compare to Stellantis. So Deliveries, similar to Stellantis, up 12.8%. I think that was slightly more actually than Stellantis, so pretty good. Production and sort of sales slightly lower. Revenue up 18%, which is very good. But earnings after tax down 20%, so 8.5 billion, where Stellantis was 10.9 billion. Obviously, Volkswagen, a much larger company as well, considerably more revenue, sort of pushing not quite double the revenue, but sort of certainly 80 or 90% more, and to be getting less net profit is not particularly great. Obviously, they are spending an awful lot. Maybe you could say they're modernising their factories and bits and pieces quicker than Stellantis are, and they might need to sort of catch up, or they'll fall behind. But yeah, sort of R&D costs up 10%, 10 billion euros. So yeah, there's a lot of spending going on there. Net cash flow 2.4 billion euros. So that's clearly spending an awful lot. They want to be sort of building battery factories and sort of modernising the existing plants to be able to produce electric vehicles. So there's an awful lot of spending needing to be done, and that means still potentially more debt, and because they're only making sort of 10 billion a year, or sort of 15 to 20 billion in operating profit available to be spending on sort of expansion and modernisation. So it doesn't leave any room to pay off that giant debt pile, which is sort of mainly my issue. So if you come down to their brand breakdown, this is quarterly, so this is April to June. Core brand group up quite a bit. That's sort of seen a large amount of the rise. Revenue up 53 billion to 68 billion, and profit sort of has come from a lot of the profit has come from there, to be honest. So this is your Volkswagens and Skodas and Seats, that sort of thing. Progressive brand group is up a reasonable amount. The sales revenue up slightly less on percentage, and operating profit down quite a bit. And then sport luxury brand group, so this is your Porsche and your Lamborghini and Bugatti and that sort of thing, is up again 149 to 171,000, and yeah, revenue up again less than the core brand, and profit up less than the core brand, but obviously is positive compared to progressive brands. And then Traton commercial vehicles up pretty well, and revenue up and profit up incredibly. So this does include their newest acquisition, Navistar. I think the numbers are sort of still filtering through to them, but yeah, 1.8 billion on operating profit for the commercial side. That's rather nice. So pretty good results overall. Just as I say, the only thing that sort of gets me is the debt. It's not as if that debt is rocketing up in interest rate anytime soon. They've got a hell of a lot of perpetual debt at sort of 1%, and crazy low rates really, considering where sort of base rates are around the world. And they've got a little bit that is sort of being refinanced in the next year or two, but I just don't like having it there, to be honest. It's sort of, essentially, you should be looking at enterprise value rather than just market cap. And if you sort of say enterprise value, they're sort of 200 billion euros compared to if you were to take all of the net cash off Stellantis, you're looking at sort of 30 billion euros. So yeah, it's kind of crazy, I think, when you look at sort of even operating profit being higher with Stellantis, and certainly sort of profit after tax trading blows this year sort of is lower than Stellantis. So yeah, I just see them as the sort of maybe not safer play, I guess, but safer play financially, even if Volkswagen might actually be ahead on the cars and certainly on the electric cars. But yeah, that's my thoughts really. I'm sort of still having the much larger position in Stellantis and sort of kind of considering maybe even selling off some Volkswagen for sort of more upside potential. Sort of seeing a lot more, spoiler alert, in the option side on gold and silver miners. So both of these are in the invest account. I'm holding my Stellantis position as probably my largest position still, and yeah, potentially selling off or Porsche rather than Volkswagen Group, just because I can't even see them moving up sort of 2x, maybe not even 50% sort of in the next 2 years, and sort of the gold and silver miners, I can see an awful lot more upside for them, and sort of the downside risk on Volkswagen, I would say, is a lot more than Stellantis, with sort of people considering that debt, and sort of if we go into a bit of a recession, then again Stellantis have got that net cash position just to sort of bump things up. I can't imagine it going even close to that really. So yeah, Volkswagen I think has got more potential downside in a recession. So I keep saying it, but this position could be sort of either lowering or gone over the next month or two. So speaking of gold, Equinox Gold have released their results. Haven't got Core Mining or Fortuna just yet. I believe they're next week. Equinox sort of still in a expansion sort of transition period, but they produced 137,000 ounces of gold. Pretty good, but they are still on the course for sort of 250,000 rate sort of late next year, it looks like, sort of 1 million a year. This is sort of closer to obviously 550 to 600,000, but yeah, the all-in sustaining cost has come down, which is very, very nice. This was sort of $1,600, $1,650 last period, and that's come down to $1,500. So this could be temporary, but yeah, very nice to see. I don't really sort of focus on earnings too much at the moment because they're sort of spending a huge amount on the expansion. So really, as long as they're sort of fine balance sheet wise and cash flow wise, I'm really looking at sort of where they're going to be in the next year once the expansion's finished, and they're sort of doing, maybe more like 800,000 to 1 million ounces per year. So if they're at $1,500 all-in sustaining cost, you look at sort of 1 million ounces. Even if we stay where we are, that's $500 an ounce. Sort of by 1 million ounces could be sort of 500 million potential sort of operating profit, I guess. Yeah, and that was down from $1,658 last quarter and $1,657 in June last year. So very sort of steady, and that has now come down. Hopefully this is permanent. So revenue up from last quarter and last year with the higher gold price. That just sort of helps stem the losses, which is very good. Adjusted EBITDA up as well. So as I say, sort of they should be able to get through to next year, sort of expanding and not losing a huge amount, not really having to take on any more or a huge amount of debt at least. Net debt has gone up from last year and last quarter, kind of as expected, to sort of fund this operation. Whether they would sell sort of debt or shares is, up to them really, but he's kind of going for the same thing. So yeah, I didn't really mind too much either way. As I say, if they sort of get to a million ounces sold per year, you could be looking at sort of a million ounces at even $500. So if we sort of get a bit of bullishness into gold, even at 10 times earnings, it's $5 billion, $5 billion, and they're at $1.5 billion at the moment. I think because people are just focusing on obviously this, earnings per share at 2 cents, 6 cents last quarter. So they're just seeing them as a loss-making company, and they do have an adjusted net loss. So get the expansion finished and get back to sort of just showing a profit, and I think people could suddenly look a little bit more favourably. And then lastly, the Clean Spark, not earnings just yet. I think earnings are next week, but we got the July mining update. So looks pretty good as well. Bitcoin mined in July, 575. So this is sort of up slightly from last month. And yeah, is not really up from sort of earlier in the year, because difficulty is rising a hell of a lot. But they're at least keeping pace with that. So they're at 9 exahash now, on the way to 16 or 17 potentially by the end of the year. So very nice. And they're also hodling from the looks of it. They've sold 43 of their 575 Bitcoin for the month. So they now hold 1,061. Not a huge amount of money. It's sort of $30 million or so, but sort of for a 500 to 600 million dollar miner market cap, that's not too bad. That's sort of 5% of the market cap now. Obviously this has doubled basically in the last month. So they're not selling all of their Bitcoin to fund expansion for now, at least, which is pretty good. I want to wait until the earnings at least next week, just to see if they're sort of selling shares instead of selling their Bitcoin. I do have a number of shares and dilution sort of factored into my model, so I want to adjust that and adjust it for recent costs. So yeah, we'll see. So coming to the news for the week, you had very early on the provisional, I guess these are provisional and sort of could be revised drastically, but Europe come out with their provisional CPI numbers. Sort of core CPI year on year actually rose, even though the monthly was in fact negative. It was expected to be a lot more negative, minus 0.5%, but it was minus 0.1%. It's still negative. I guess other countries wouldn't mind a little bit of that. Regular CPI sort of as expected, 5.3%. The monthly was negative. That was expected to be 0.3%. But I guess these are all provisional numbers, and could be sort of subject to a lot of revision. Nationwide house price index for July down 0.2%. So the annual has risen from minus 3.5% to 3.8%. Again, slowly price is coming down, but it is trickling. And then you had EU unemployment rate, that's for June, so it's not all that up to date, but 6.4%. ISM sort of manufacturing PMIs. People are saying sort of don't put too much into this these days, because the US isn't really a sort of manufacturing industry, but that's at 46.4, which is sort of indicating contraction still. And Wednesday you had the ADP non-farm payrolls number, so you get this on Wednesday, and then the sort of proper number, if you like, on Friday, or the officially reported number. ADP sort of last month disagreed quite a lot with the main number on Friday. 455,000, and sort of was expected to be 189,000 this month, and was 324,000. So again, quite an outperformance. But you come down to the Friday number, we got 187,000 from sort of basically the same as last month and below expectations. So not quite sure what's going on between them and ADP. ADP sort of being the payrolls company. So they're saying more people are getting paid, but it doesn't agree with the sort of official statistics, which is unusual. And then, so last week you had the US and EU rate rise. This week we've got the Bank of England rate rise, sort of as expected, 0.25%. There was talks of they might go 0.5%, but that didn't materialise. So yeah, that's put us up to 5.25%, sort of pushing towards the consumer price index number. Oh, and you had the ISM, so the non-manufacturing PMI. This is the sort of considered the broad US market, or the sort of broad US economy, and that was 52.7, so slightly down from last month, but still sort of above 50, so still expansion. And non-manufacturing prices 56.8, so prices going up in sort of the service industry. So then on the Friday, you had quite a drastic move in the dollar, and sort of gold and silver and things sort of rocketing around, really. The people didn't seem sort of all that happy with the non-farm payrolls number, but yeah, there hasn't been sort of too much move in the stock sides. No moves from me, certainly in the invest account. Still sort of waiting to see sort of how some of these play out. But in the ISA side, I did make a couple of switches. Sold some of the Lixor overnight money market fund. So I was at 12 shares of that, down to 9, about 3,000, just over 3,000, and split that between, yet again, Coeur Mining, Equinox Gold, and Fortuna Silver Mines. This seems to be my sort of largest potential risk reward, I think, at the moment. CleanSpark sort of has obviously come down with Bitcoin price coming down slightly, especially on Friday. But yeah, certainly on the option side, I do see at the moment more potential in the gold and silver miners than CleanSpark. So I haven't been buying, and I haven't been buying in the stocks as well, because they're at sort of $5.30 now. I sort of see obviously upside for them, but yeah, I just thought I would up my gold and silver even more. And yeah, the sort of other stuff, my sort of REITs and that sort of thing, haven't really moved all that much for the week. Gold and silver miners have sort of they were coming down on Friday, but they've sort of been up a reasonable amount they're actually up on Friday, but they've sort of been jumping around really on all of this news. They're up slightly from where I was buying before, certainly Equinox in the sort of the mid fours, and Coeur Mining did sort of come down to, I believe, the 260s, and sort of Fortuna was closer to $3, so they're a little bit up, but I decided to buy anyway. IG ISA basically haven't moved. So frustrating that I still can't transition this to Interactive Brokers, but there you go. They don't seem to be all that bothered. And the Interactive Brokers account, I've still got Baidu and Alibaba sort of up and down again. Alibaba sort of under $100 again. Baidu sort of outperforming. But the option side, I've been piling a little bit more money into options. So a couple of different dates I've got on Coeur Mining. I bought some of the January 2025s. and a little bit more of the December 2025. So that is largest position now, because I haven't bought any Clean Spark, and that's come down a bit. Bought a little bit more Equinox and Fortuna, and Himax. So yeah, getting a little bit more into these. That's sort of nearly £3,000 worth of options now, and sort of considering putting another 1,000 into there shortly. Just see these as potentially an incredible return if we do get a sort of, hopefully, I think a nearly 50% move in gold sort of in the next couple of years. I think obviously that could drive up the mining stocks a hell of a lot, and it would drive up the options even more. You could be looking at sort of 4 or 5x in the mining stocks if gold did do that, and on the options, it could go crazy. You could be getting 20x on the options. So I see that as potentially higher than some of my cryptos. So that is why I haven't bought a great deal of crypto recently, and I have been buying options. It just seems potentially a better risk reward. So yeah, leave your thoughts in the comments below. That's basically the portfolio for the week, and like and subscribe. See you soon.